All right, everybody, welcome back. It's episode 102 of the Canadian Private Lenders Podcast. Neal, we're still buzzing here at the Canadian Mortgage Summit.
Yeah, we're killing it.
Can you still hear me?
I can still barely. They're getting louder by the minute.
Absolutely. It's been great here today. We just had an awesome interview with Armando Diseri, Chief Sales Officer at Alta West Capital. Super interesting to learn about this private lender. They're Calgary-based, but most of their volume is now in Ontario by the sounds of it.
Yep.
Although Armando, you'll hear it in the interview, he goes through some interesting acquisition they just had of Premier Mortgage out west, who's very much west focused and kind of more rural lending focused versus them, Alta being more urban focused. So really interested to hear about their growth strategy there. We get into some of their products as well.
Yep.
What else caught your attention, Neal?
I think the things that I found really interesting is they're backed by financial institutions. So a lot of the mix, a lot of lenders that we talk to have a lot of institutional investors in there. And so they did originally, and then they made the transition he was saying about, I think it was 8 years ago, to being backed by institutional money. Well, which seems to have changed their products, but also seems very affordable in the private space. And then the second point that he made that I thought was really interesting that I'd never even considered was the foreign buyers. So take a listen. You'll see he's got some interesting points on foreign buyers that I think actually could have a great impact on our marketplace, considering where the Canadian dollar is and what's been going on.
Absolutely. And you'll see Armando is very optimistic about the future growth path for the private lending space in Canada, which we're super excited to hear as well. But hope you enjoy the interview up next.
Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal, Andreino, and Ryan MacNeil. Enjoy.
We're here with Armando Diseri, Chief Sales Officer from Alta West Capital. Armando, how you doing? Welcome to the podcast.
Well, thank you for having me. I'm very excited to be here.
Great to finally meet you in person. I know Alta is a huge brand name in the private space in Canada. Honestly, don't know a ton about it. Which we're going to dig into today, but I'd love to hear, Armando, a little bit about your background, kind of how you ended up in the mortgage space, how long you've been in the mortgage space, and how you ended up joining Alta West.
Well, that's going to age me. Right out of school, I've went into the finance company back in beneficial days, and that was where I first started my foothold in the mortgage industry. And then back in 2004, I started with Home Trust. And with Home Trust, I've been there for 15 years. And where I got to know Alta West is when Home Trust used to have the bundle product. Alta West was one of the mix that were doing the second piece of the bundle product. And I got to know all the the CEO and the CFO at the time. And then an opportunity came, and I decided to join Alta West. The reason being is it was a great opportunity for me, but also I see that the private space is what Home Trust was back in 2004. The type of lending, the equity kind of based lending, looking at property first, and I saw this space is going to continue to grow, and this is where I see the opportunities now in the mortgage space.
So I want to start by saying, Armando, I don't want to be brutal. You got to yell in here because it's so loud. I think the audio is probably picking up great, but my ears are not picking it up great.
Right.
So I apologize. But can you tell me a little about Alta West? Because I'm also not super familiar with your guys' business. So just kind of run me through exactly how would you elevator pitch Alta West?
Yeah, so Alta West, I've been 5.5 years now. Alta West has been lending since 1991. It's a Calgary-based lender. I obviously, here in Ontario, I oversee all the BDMs and the marketing team for Canada. And basically, we started as a second mortgage lender. And then we evolved as we got away from the bundle product because of B20. That bundle product doesn't exist anymore with Home Trust. So we had to switch and become a first mortgage lender. And so our portfolio started to change in the last 6-7 years, since 2017, into a first mortgage kind of lending operation. And what really differentiates us amongst a lot of the other lenders is that, we have private investors, but we have also institutional lenders. And we have that diversified funding source. We have several banks and trust companies. We just signed on a life co that's providing us life lines that we can provide rates as low as $5.99 now.
So were they like the financial institutions, the one that kind of made that push and said, we don't want you guys to be doing seconds anymore. We want to move your business. Okay.
Yeah, and that gave us the opportunities to do a lot more volume and do a lot more first mortgages. Because as we all know, we're all in the private space. When you start up a MIC, you have private investors, but you only can grow as quick as you bring on the investors.
Yeah.
Where you have the institutional money, you're basically securitizing, quasi-securitizing with those institutions. So you're continually lending, and you're able to grow as your share capital grows.
So, and sorry if you already said this, but was Alta always set up like that, or did it start with institutional investors and then you converted over?
Yeah, it never started that way. About 6 years ago.
Okay, so that whole shift happened around then.
We started making that transition, and we signed on our first lender.
Yeah.
And we're one of the first that had a securitization program.
Interesting.
On the private side, and we started to grow. And then, as we all know, you perform well, the lines get bigger, more get interested in offering you money.
Yeah.
And like I said, we signed on, with a life co, which it was their first venture in this space as well. And that's a testament to who we are and how we're built, the infrastructure, and they like what they see and how we run our business, and we're able to scale it up that way.
Awesome.
Interesting.
So Armando, you mentioned you guys are a Calgary, Alberta-based lender, but you're here in Ontario. So can you talk a little bit about the geographic split? Are you primarily lending in Alberta? Do you lend here? Are you in BC? Like, where else are you in?
Yeah, it's our book right now. About 60% of our book is here in Ontario.
Wow.
Oh, wow,
and then you have about a 15 to 20% in Alberta and the rest in BC. And that's where, actually 25% in Alberta and the rest in BC. And I think that's where you're seeing, but you're starting to see that switch in the last couple of years. We used to be around 65 in Ontario. What we're seeing is Alberta really is on fire.
Yeah.
And we've been growing that book considerably.
What's driving that growth that you're seeing in Alberta?
Alberta, it's just we're seeing a lot of it's affordability. That's what it boils down to. We have 20% of our volume that's from Alberta is from brokers that are Ontario or BC based, because people are going and moving there because of affordability. Lower taxes, no sales tax, all that's good stuff. And I think that's where you're starting everybody to migrate there, and that's just growing the market there. And I think you're going to continue to see that as the commodity space also gets very aggressive, which I believe in the next 10 years it's gonna go tremendously, and that's going to help the prairie provinces.
Cool. We saw the same trend in Atlantic Canada 3 or 4 years ago with a lot of Ontario brokers, people from Ontario moving to Atlantic in search of affordability. Not so much lower taxes. Our taxes are much higher out there, unfortunately, but it slowed down significantly for us. But it seems like Alberta is still pretty hot.
It's pretty hot, and that's really it's funny because you go back 4 years ago, it was quite the opposite. BC, Ontario on fire.
Yeah.
Alberta was depressed, and then as you started seeing the switch and rates going up, it started reversing, and Alberta started skyrocketing. And it all boils down to affordability. You could have bought a single detached home for $400,000 or $500,000.
Yeah.
When you guys are like preparing for growth and lending in that area, are you monitoring the commodity space? Because I feel like that's something. Whenever I hear from people about lending in Alberta, that's always been their biggest concern. Is the market is so heavily tied to like energy, effectively.
Yeah, and which is very interesting, because what we've been seeing in the last, say, 4 or 5 years in Alberta, a little bit of a transition from that commodity space.
Yeah.
It's still oil-based, oil and gas.
Yeah.
But there's a lot of technology companies going there because what's happening is the affordability of commercial space is cheaper. So we've seen companies that have IT departments saying, hey, we're going to put our IT department in Alberta because commercial space is cheaper. It's a cost center. So, and then you have the employees saying, yeah, I don't mind moving. I'll make the same amount of money, but my housing cost is going to be dropped by a third.
Your taxes are lower, everything.
So it's a win-win situation. So we're seeing a lot of these technologies, IT departments moving to Alberta, Calgary specifically. And you're starting to see that little transition and a little bit more diverse kind of economy other than that oil and gas. They're trying to expand their economy.
Which is smart.
It is smart. But going back to the commodity space, my personal opinion, it's not the company's, but I think in the next 10 years, we're going to be in a big commodity boom. Oil and gas, silver, uranium, gold, all that is going to be a commodity boom. I think the prairies are going to be on fire, in my personal opinion.
Still chasing lenders for updates? Manually entering deal details? Are you a law firm still not able to perform a discharge with just a simple button click? Well, Lawyer Automator is the modern solution built specifically for real estate law firms working with private lenders. Eliminate manual effort and automate intelligent document generation and digital instructions between lenders and lawyers with just a simple click. Enjoy seamless communication across your entire team and all stakeholders involved in the deal, from clerks to partners and everyone in between. Get comprehensive end-to-end reporting with visual business intelligence tools right on your screen. Perform discharges at the touch of a button. And because we're connected to Canada's largest private lending network, we'll even help you grow your client base with exclusive networking opportunities. Lawyer Automator. Work smart. Close fast. Grow your business.
Very cool.
We were going to ask you a little bit later on, but I think maybe we'll move it forward because it fits. So is that where you're seeing the growth then for you guys in lending is in Alberta and in that region? Like, is that going to be the focus? Because a lot of lenders obviously have focused heavily on Ontario.
No.
It feels like, and correct me if I'm wrong, but it feels like we might be running into a bit of a downward or stagnant marketplace here for a bit. I think that we're already in it. So is the focus then for you guys maybe to try and shift some of that capital back into the Western markets, get more deployed there?
Yeah, for us, it's we're still as aggressive as we want to be in Ontario. We think there's still opportunities here.
Okay.
We do quite a bit of business still in Ontario. Like I said, 60% of our volume right now is still coming from Ontario, or our book is. But our volume is right now is roughly about, I would say about 50% of our volume is still from Ontario. In the last little while. It's been slow in the first half, but we're starting to see a pickup not only on the refis, but on the purchases side. Condos is still going to be an issue. Yeah. We still have, we're very concerned about the condo market.
Yeah.
But I think in the major urban, suburban areas, major markets, single detached home, townhouses, semis, I think they
remain steady.
I think you're still going to be a market for it. I think there's still people that need to buy homes. I think what we're seeing is just a drop in investor appetite.
Yeah,
and
that's in real estate.
That big chunk is gone for now.
Yeah.
I think, but people who need to buy a home for shelter, there's always going to be a market. So I think we're just waiting now to a little bit more incentives, right? Rates are dropping. We got another quarter point drop this morning. I think we're going to see. What's that?
I said breaking news.
Yes, breaking news. Yes, and I think that's so. I think once people start seeing it, and you're starting to see the activity starting to happen slowly. But I think really the only thing, if you take away the condo market, the housing market is okay. It's not. You're starting to see a little bit stabilized in certain markets. Yeah. As you get outside the GTA in Ontario, that's when it gets a little bit more challenging.
I agree with you on that.
Just on how are you guys structured on the investor side? Are you guys a MIC? Is Alta West a MIC? Okay.
Yes, we're a MIC. Yeah.
Okay. Yeah. And you operate exclusively in that space? You don't do anything outside of the MIC?
No. We have two funds. One is a first mortgage fund, and our second fund it's called a diversified fund, which is a mixture of first and seconds.
Got it.
Yeah. Cool.
Within those, And like listening to what you're saying, does it make sense and is an objective for you guys to get exposure on the commercial real estate market in Alberta? Like that'd probably be a good, like maybe the industrial market, a good proponent of growth and stability over the next 10 years, if that's
100%. So right now we do mixed use and multi-res properties. That's our extent of our exposure because we need that residential exposure.
Sure.
Yeah.
But one of the things that we are looking at down the road is having a fund that's strictly for commercial. Small commercial, not so much the big commercial. I think there's opportunities for small commercial, and but that's TBD.
Okay.
Got it.
Okay.
Alta West has been in the news a couple times recently, very positive news, but a couple things I wanted to touch on. So one, we noticed you guys have a new B product or a low doc mortgage.
Yes.
Obviously seems like a product that could be a good growth engine for you and potential risk management. But what I'm always curious about, and we've kind of thought about B products in the past, and it's like, does it cannibalize your private business? And do you get brokers pushing you that like this should be a B deal, not a private deal, and you should charge 2 points less or whatever your spread is on something like that?
Yeah.
I'd love for you to talk a bit more in depth on that.
So the whole purpose of that product was, the catalyst was, once again, having that diversified funding, we're able to give rates as low as 5.99. Not a lot of people can offer those type of rates. So that's an advantage we have, a differentiator. But I think what's happening in the marketplace is that brokers are frustrated with the B lenders. And frustrated not in the sense of terms of pricing, it's the process. It's the documentation. So we said, what is the lowest we can offer our broker partners that they're happy, we're close, we're in that kind of B space, on the higher end of the B space, but avoid all the documentation, the 12 months bank statements, the blood work, the DNA test, all that fun stuff that they're asking for. And we're here at the conference. I was just talking to a broker right now. He was just livid with a particular lender, saying like, I give them everything that they asked for, and now they're asking for more. And it's like 3 weeks, and they still haven't finalized the deal. And that's the frustration. And we thought we can pick up a lot of deals like that.
Can you share which lender it was so we can trash them?
No, it wouldn't be nice.
Okay, so this might be the secret sauce or like the secret recipe you can't share, but how are you doing risk management and underwriting those deals if you're eliminating all those things to offer such a low rate?
Beacon score. Beacon score is one of the things that we look at. Then we look at, even though we don't ask for documentation in terms of if you're business for self, and that's a big segment of our portfolios, the business for self. We don't ask for bank statements unless it's 80% or 83% product.
Yeah.
We ask for 3 months bank statement just to see their cash flow. But typically we don't ask for banks. All we ask for is articles of incorporation and a stated income letter. That's it. But what we want is based on the stated income that you've given us, what does that TDS look like? And what we want to make sure is that if that's 70, we cap it at 70.
Yeah.
Right? So you give me stated income and it's over 70. It's like, okay, we're not verifying it. It's over 70. It's like, okay, this is not, maybe we can go into another product, but for this product, we want somebody that's under that 70%. And when we say stated income, like if you tell me, I work at Tim Hortons and I make 250 grand, well, that's not reasonable. So we might call that out. But if I got a plumber that's making 150 grand, that's reasonable. I'm going to take it at face value, and then we work out the TDS that way. So there is a little bit of mitigation that way, but really credit is first and foremost. Property, making sure that it's an urban, suburban area, it's a marketable property, and then TDS.
Have you found that product to be popular?
Very popular.
Yeah.
Right now in our first mortgage segment, it represents 41% of our volume.
Wow.
Yeah.
Holy smokes.
Yeah.
Okay.
Since we launched it, it's been tremendous. So that was the 1 year 599 with a 2% fee split. But then we have our other express product, which is still 599. It's a 2-year term, second year open, and the fee is only 2.5 paying the broker 1. So
wow,
it's a very, very competitive, and they love the 2 years because the second year is open. And right now what we're finding is taking customers about 18 months now to fix whatever they need to fix to graduate to either a B or A lender.
Sure.
So broker loves that optionality.
And so is that express product structured, like what's the difference between that? Is it simply the term, or is it in the documentation there's another?
It's same qualifications.
Okay.
Same
Okay.
qualifications. The only difference is the term. You get a 2 year, and the fee is 50 basis points higher.
That makes sense. When I was browsing through your guys' site, I saw a bunch of other products kind of under the flex box. Is that simply saying it's an open term, or is there a few other things with that?
Yeah, the flex product is our catch-all. Anything that doesn't fit into our express product, which is owner-occupied, beacon score required.
Yeah.
If it doesn't meet that criteria, it goes into our flex product, and that's our catch-all. That's our bread and butter. That's where the yields are a little bit higher, but we can go up to 83% loan to value.
Okay.
83% is a new product we just launched 2-3 weeks ago.
I was curious about the 83%. Is that basically 80 with fees capitalized?
You got it. It's capitalizing our 2% fee and the 1% to the broker.
Got it.
Makes sense. And so the flex products are typically like individually tailored for each person, kind of depending on the risk and the equity available.
Absolutely.
And
yep.
Beacon.
The rates start from $6.99 up to $8.99, depending on what the loan to value and risk profile.
Got it. Okay. So another big piece of news for you guys recently was the acquisition of Premier Mortgage. So not to be confused with Premier Mortgage Center, that's the brokerage in Atlantic and Ontario. Premier Mortgage, this is a Western-based lender that you guys acquired, correct?
That's correct. It's
so talk to us a bit more of this. I'm always curious to see this because you don't hear this happening that often in our industry. I've been part of an acquisition in the past in Atlantic Canada, but there's really it's kind of few and far between. But I also kind of feel like consolidation could be coming more and more in our industry. So talk to us about this acquisition, kind of why it was strategic and what synergies it'll drive for Alta.
So just to go back in October of last year, we were Tri-West Capital is a private equity firm, bought a 51% stake into Alta West Capital.
Okay.
So as you can appreciate with private equity firms, they want pedal to the metal, let's grow. But we had that initiative already, and we already started this. And part of our mandate as a company was to grow. We wanted to grow organically, but also through acquisition, strategic acquisitions. And this one was a long time coming. We've been talking to them for quite a while, and we finally closed this deal. They're a great company. They're based in Kelowna. They lend in all three provinces that we lend in. But they have a different twist. We're more focused on major urban, suburban areas. We do touch on outside of those areas a little bit, but their focus is kind of the opposite. They like that, outside of major urban centers. Now the loan to values are a lot lower, but obviously it's a market that's underserved in our space, and they've captured it. So when we were looking at them, we thought the synergy of the two would make so much sense. And so we think it was a nice addition, and they got a great team.
Has it been a complete roll-up? So has their team moved into your guys' offices?
So we just started. Okay. We have a team out there this week. I'll be out there next week. We're integrating systems right now, but we're just running them independently.
Yeah.
Helping them out with their marketing strategy and so forth. But right now it's just looking at integrating, understanding their underwriting a little bit more. We have our chief risk officer there this week, meeting with the underwriting team. So it's very fresh.
Okay.
So, sorry if I missed it there, but are you guys going to keep the branding as it is, or is it going to flow into Alta? Or
right now we're keeping it as
keeping
is.
it as is.
Yeah,
Okay,
yeah,
cool.
Yeah, the brand. It's a well-recognized brand. Brokers love them, and I think we're going to keep it for a while.
And the focus there was, again, to capture market share more so. Like, they had a good team that operated in a market space that you guys weren't involved in. So now you've captured that as well.
Exactly. And I think they're in the broker space, and they're brokers that they deal with that we don't. And it's just when you look at it on a macro, it just made so much sense to merge together. Just on the underwriting, their diverse broker exposure that's different than ours. So it just made total sense to make this acquisition, and it was perfect timing for both of us.
Cool. And BC based exclusively?
No, they're in BC, Ontario, and Alberta.
Wow. Okay.
Yeah.
Very cool.
Which, if you look at their book, it's the reverse of ours.
Interesting.
Heavy in BC.
Yeah.
And smaller in Ontario.
Got it.
So
Interesting.
Cool.
So with that, what do you think is going to fuel your guys' growth moving forward for Alta West? Is it going to be continuing to either add new products, more acquisitions, more regional offerings? What do you think is kind of your guys' focus?
all of the
moving forward?
above. All of the above.
Everything.
We see them, like, I think there's opportunity for innovative products.
Yeah.
I think we touched on the commercial side. That's something that we want to look at doing down the road. Geographically, we're talking about expanding, going to Eastern Canada,
Nice.
which that's something that's on the board. I think
There's no space.
What's that? No space.
Market's too small.
Are you a private mortgage lender in Ontario looking for trusted legal support? Meet Grecky Carter Professional Corporation, a boutique real estate law firm in Midtown Toronto with deep expertise in private lending and mortgage enforcement. Grecky Carter closes hundreds of private mortgage deals every year, and when recovery becomes necessary, they handle both contested and uncontested enforcement with precision, from forbearance agreements to power of sale and cost recovery strategies. For lenders who demand clarity, efficiency, and results, Grecky Carter has you covered. Visit gclaw.ca to learn more and safeguard your private lending investments.
But acquisition is still one of our things that we want to because I think in this space it's very fragmented.
Yeah.
There's a lot of players. There's a lot of, I call them ankle biters. I think I think there's opportunities for us to come in, be strategic on the acquisition side, grow our AUM, and bolt these companies into our diverse funding machine, right? And I think that's where we can really expose and leverage our background.
When you're doing an acquisition of a MIC, are your financial partners effectively buying out all the investors and shareholders of that MIC and taking on all of it themselves?
Alta West is taking on the management company is taking
All the assets.
all the assets and the investors.
Yeah.
Interesting. Oh, so that's a great way for them to get large deployments in one fell swoop.
Yeah. So like if you look at their investors, they have, a certain amount of share capital, and we want to maintain that, right? And then what we can do is take that and leverage it with our funding sources, our external funding sources, and you just leverage and grow the business.
Love it.
This just popped in my head, but so were you with Alta West prior to the transition from being an investor-based MIC to predominantly financially institution-based?
I just started 5.5 years ago. So
okay, so they had already made that transition.
When I started, we just shortly after we signed our first deal.
Okay.
Yeah.
Because I was just curious if it felt like there was a change in motivation or like the way that the bank operated with that conversion. Like if focuses were a little different, because we've always touted that privates operate so differently. The mindsets of the operators are totally different. And so, again, where you have them involved, does it change kind of how you guys operate? But I guess.
Well, when you have that institutional lender, they need to feel comfortable with your operation, because that's the key. Cybersecurity. Do you have that in place? Do you have, underwriting guidelines? I could tell you there are MICs that we explored. They don't even have guidelines, and so if when an institution comes in, they want it to look and feel like an institution.
Yeah.
They don't want, for lack of words, a mom and pop shop, right? If they're going to give you X amount of millions, they want to make sure that you have an infrastructure that protects and there's risk mitigation. You have a collection process. You have a foreclosure team. You have a cybersecurity plan in place. These are all things that institutional lenders look at.
Yeah.
And you need to have that built in, and that's what we built. We built an infrastructure right down to our CRM where everything is visible.
That's awesome.
Having the systems and functions in place to run like a bigger business.
Got to have that base.
Yeah.
Okay, a couple more, and we're going to start to wrap up here. But I read comments you had made recently, and they really resonated with me in terms of a rise in higher quality borrowers in the MIC and private space. So I know we've seen that, but I'm just curious, what do you think has driven this change? And do you think there's a lot of runway for this to continue?
I think so. I think, as I stated earlier, I think this space is only going to grow. If you go back to 2018, the whole private space in Canada was under 1%. You fast forward to today, we're north of 9, almost 10%. In Ontario alone, private space, and I'm talking commercial and everything, is 15% of the mortgage industry. So I think what you're going to see is that's going to continue to grow. Why is it happening? I've seen it happen firsthand when I was with the B lender. OSFI puts more and more restrictions. We went from no bank statements to 12 months bank statements, and it gets more prescriptive as the years go by. So what happens, you get that trickle down effect. How did the B lenders get so big today? Because of that trickle down effect from A lenders. Before it was like A and private, that was it. Private wasn't doing first mortgage, they were mostly second. So it left a big void. So you had that trickle down effect. Now the B lenders got so big, they're regulated by OSFI just like the banks are. Mm-hmm. Guess what? More regulation. So as they get tighter and tighter, more prescriptive on their underwriting, you get that trickle down effect. So you're getting good paying customers. They're missing the mark because bank statements, NOAs don't reflect what their true income is. All those things come into play.
Would you agree that with that, it adds a certain level of risk to the mortgage marketplace? Like it adds a bit of risk in the fact that obviously the A's are extremely intensive with their underwriting. Bit of our pitch is that we are a little bit less intensive. Do you think that adds a bit of risk to the marketplace? And like, how do we manage that from becoming a situation where it's a very, I don't want to say inflated marketplace, but it becomes inflated or there's...
Are you talking about risk on our part or?
Yeah, risk as a lender. Like
as a lender,
how do we manage?
See, I look at it de-risks us because when you're getting customers that have good high beacon scores, that tells you something. They pay their bills.
Yeah.
And you know what? Who doesn't want their book to have all, close to 700 beacon scores, 680 beacon scores in their books as a private lender? It's a win-win situation.
Yeah.
But the only way you get those is if you give them really competitive pricing, right? So you have to have the pricing in order to attract those people. Now, there's some people that don't qualify for that $599 because they're buying investment property. Well, if I give them a $799, they'll still take it because they can't get it anywhere else. But they're good paying customers. They have a principal residence. They're paying their mortgage. We can see that all on their credit bureau. The credit bureau really tells you about the client, and that dictates that profile.
Sure.
And so with that, how do you feel about, at least in Ontario, how do you feel about the Ontario marketplace right now? I know you mentioned the single-family home market's doing well. The investment condos are taking a bit of a beating. Kind of where do you see that forward momentum? Like, is there going to be a few years of pullback on the investment side? Like, what does that look like to you?
This is very reminiscent of the early 90s when I first started into the business, when I was told, oh, you're going to be lending. And then I did more collecting than lending. So I think, and back then, it was a totally different market. Back then, you could dig a hole to build a condo before you even sold one condo. There's a totally different dynamics back then. I think what we need to do is digest a lot of that condo business, the excess units. I think it's going to take quite a while for us to digest all of this. Now, if anybody's listening out there in terms of federal government, You want to fix this problem? You can do it with a swipe of a pen. Let foreign buyers start buying properties again. If you do that, I'm telling you, it will absorb all this excess condos that nobody wants to buy, and we can get back to business.
Do you think that comes back?
Do I think it's coming back? I think it's a political hot potato.
On the policy side, yeah.
On the policy side, I think it's a political hot potato. I don't think they want to touch it right now. Because on one side, they're saying we have shortage of housing. And then on the other side, you're going to let foreign buyers in. That's not going to happen.
That kills me. I saw the article released from CMHC yesterday talking about still needing more housing. And I'm like,
I know.
There's tens of thousands of empty units all over the country.
It's such a contradiction.
It is.
And so don't get me started on that. I have my own views. But I think if they were to open up to foreign buyers and make it even prescriptive, saying condos only, I think we'll digest a lot of that inventory very quickly, and we can get people moving again and circulating money. Because right now, it's going to take time. Time, as they say, heals all wounds, and we just need to give it some time. It's going to be a while, but I think people who need to buy a home, there's opportunities out there.
Last question before we hit you with a bonus question. If there's one thing you would change in the mortgage industry, what would it be?
One thing I would change in the mortgage industry. That's interesting. I think, we talk about, the brokerage industry. I think what we need to do is that education piece. I think we're on that path already. Like here in Ontario, we have the level 2. I know BC is, to get a license in BC is very, very prescriptive. And I think we need to continue to elevate the bar.
Yep.
And I think if we do that continuously, and because, we're dealing with customers' livelihood. This is their biggest purchase. And we want mortgage professionals out there. And the only way you become a professional in anything is education. It's learning everything. I talk to some brokers, they only do A business. I'm thinking, okay, if a customer doesn't qualify with A, what happens to that customer? You send them away. I go, why? There's opportunities. You can send them to a B lender. You can send them to a private. There's opportunities there. But you're a mortgage professional. You should be dealing every aspect of the mortgage, regardless if it's A, B, or private, or MIC, or whatever.
Yep.
So I think that's one thing I would like to see is elevate the game, the level of entrant.
Yeah, well said. I completely agree. Neal, do you want to hit the bonus, or you want me to go?
No, you're always a bonus guy.
All right. So we always ask our guests a bonus questions at the end. It usually relates to either food or sports. Okay.
Oh, let's hope it's food.
Okay, we'll go with food. So I know you're a chief sales officer, so I assume you get out for some nice meals once in a while. Give us, Armando, your favorite restaurant in the GTA.
Oh, my favorite restaurant.
Or you can even go across the country if there's something else that resonates with you, but putting you on the spot.
That's a tough one. Jeez. I think my favorite restaurant, other than my mother's house, would have to be. Oh, geez. I don't want to segregate the.
Are you
Soto would probably.
Okay, I've heard that before. Soto.
Soto.
Okay,
Yeah,
Italian.
Yes.
Nice.
We got to put it on the list, Neal.
I was gonna say
I've heard that one a couple times before. I've never been there, but
it's
what part of the city is it in?
It's in downtown Toronto, Yorkville.
Downtown. Okay. Cool.
Awesome.
Put that on the list. Armando, thank you so much for this. Fantastic insight. Anything else you want to add before we wrap?
No, I thank you for this opportunity. I think I'd love to do it again. I think there's going to be more new and exciting stuff that we're going to come out, and I'd love to share that with your listeners.
Awesome.
In the future.
Thank you so much.
Appreciate it.
Thank you.
Appreciate it.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan MacNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.